everybody. Real estate attorney Robert Noggle here with another one in a series of videos about 1031 tax-deferred exchanges, the biggest benefit in the tax code for real estate investors. With a 1031 exchange, you can defer capital gains taxes, depreciation recapture taxes. You can leverage those deferred taxes into bigger, better, more profitable properties. And last of all, you can adjust your real estate portfolio to suit your current needs and geographic needs. So 1031 exchanges are also known as like-kind exchanges. So what does like-kind mean? It's a common misconception and has been since 1921 when exchanges were introduced into the tax code that it's a swap. An exchange is a swap. I have a rental property, I have to find someone with a rental property, and then I can exchange. Identical for identical. This has not been the case for many, many years. Like-kind property is required for an exchange. What is like-kind? Like-kind means that any investment or business property can be exchanged for any other business and investment property. All such properties are like-kind. Let me give you a couple of examples. I have a portfolio of 10 single-family rentals. I'm at the point, it was a nice way to start my real estate investing career, but I would like to step it up, relieve myself of the management burdens, and get into a commercial property such as a strip mall. I can actually exchange those rental properties for a commercial property, and that is like-kind property. Let me give you some other examples. Let's say I have some raw land. I could exchange it for multi-unit. Or let's say I have an office building. I could exchange that for a commercial property, warehousing, logistics. Those are all like-kind. The only two types of property that are not considered like-kind are personal use property, i.e. primary residence, which we'll talk about in another video, and what is called dealer property. Again, I will talk about that in another video. Other than that, it's all like-kind. So what is the benefit of this very broad definition? One is, as an investor goes through the investment cycle, they may have different objectives, and those objectives can be achieved through a 1031 tax-deferred exchange. And rentals are one example, exchanging into a strip mall. Another is geographic flexibility, because exchanging can start in any state with the sale of a property, and the replacement property, the new property, can be acquired in any other state. So for example, if I live in Wyoming, I could sell my business or investment property there and acquire property in Boca Raton. And although I refer to property singularly, it does include multiple properties, as we've discussed. So geographic flexibility is huge. Sometimes investors want to go to the next sweet spot. All real estate is local, as we know, and some places have better appreciation than others and better markets for certain categories of investment property. So with this, think about your real estate, think about what your needs are, and in the next video, I'm going to explain the mechanics of how an exchange is actually conducted. But until then, this is really a huge benefit. I encourage you to meet with a real estate advisor and consider all of your options. Until then, thanks for watching.